Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TRANSTHERA Sciences, Nanjing, Inc. Annual Report. TRANSTHERA Sciences, Nanjing, Inc. is a clinical-stage biopharmaceutical company that specializes in developing small molecule therapies for various diseases. The company's pipeline includes several promising treatments for oncology, inflammatory, and cardiometabolic diseases. One of the key areas of focus for TRANSTHERA Sciences is cancer treatment. They are currently developing several kinase inhibitors, including TT-420, tinangotinib, which targets MTK to treat solid tumors, TT-973, a kinase inhibitor for various cancers, and TT-1488, a BTK inhibitor for B-cell lymphoma. In addition to cancer treatments, TRANSTHERA Sciences is also working on therapies for inflammatory diseases. Their pipeline includes TT-1688, an oral S1 modulator for treating various inflammatory conditions, as well as TT-2332, an NLRP3 inhibitor for metabolic and inflammatory diseases. The company has also partnered with Neurocrine Biosciences to develop NLRP3 inhibitors for multiple disease areas. Furthermore, TRANSTHERA Sciences is developing treatments for central nervous system diseases, TT-920, and non-alcoholic steatohepatitis, NASH, TT-1025. Overall, TRANSTHERA Sciences has a diverse pipeline of small molecule therapies that target various diseases, making it a promising player in the biopharmaceutical industry. TRANSTHERA Sciences, Nanjing, Inc. maintains a market capitalization of $28 billion, broadly in line with the industry peer group. TRANSTHERA Sciences, Nanjing, Inc. trades at a higher price-to-book ratio of 41.91 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 17% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company's financial health has undergone a notable shift over the past year. A significant increase in debt level is evident, with current liabilities rising by RMB 26,170 from 2024 to 2025. This upward trend is further underscored by the debt-to-asset ratio, which has increased from 16.6% to 23.7%. While these changes indicate a substantial increase in debt, there is currently no clear information available on whether interest expenses have followed suit. Management is optimistic about the company's future prospects, with several key initiatives underway. The primary focus is on commercializing tinangotinib in China for patients with FGFR inhibitor relapsed or refractory CCA. This will be achieved through multiple clinical trials aimed at expanding indications and market reach. In addition to this, management is accelerating commercialization preparation for core products, including securing NDA approval in China by 2026. A dedicated commercialization team will be established by the same year to support tinangotinib's launch. This T-shaped strategy will also enable the company to explore new targets and indications, further diversifying its portfolio. Overall, management is confident that these efforts will drive growth and success in the coming years. The company's financial strategy has been focused on retaining earnings rather than distributing them to shareholders through dividend payments. According to the provided information, no dividends have been paid or declared by the company, indicating a preference for reinvesting profits in its operations and growth initiatives. This approach suggests that the company is prioritizing internal investments over shareholder returns. That concludes the financial summary for TRANSTHERA Sciences, Nanjing, Inc. Feel free to comment below, and I will be happy to answer them when possible.